All right, we are a little under 2 minutes away from getting it going, so hang tight and we are going to get this thing started sooner rather than later. If you are patiently waiting there, thank you so much for tuning in early. Feel free to check in the chat. Any comments, suggestions, or even criticism, I'll take it. But 90 seconds until go time. All right, and More4 has won the race. Sierra, how's it going? Our timer is down to 0, and we are going to get this thing started once I close this window out. Give me 1 second. All right, there we go. So for those of you who are joining us tonight, thank you for tuning back in to another weekly edition of our stock market scan, option scan, market analysis. Still don't have an official name for it. Maybe we should come up with something like that at some point soon. But what we got's what we got. So welcome back to our weekly stream. Really want to put more of an effort in this week to getting into what we're doing next week. I feel like a lot of the time we spend a long time on the recap and then don't actually have the time to get into the meat of what it is that we actually want to talk about, which is, going through scans, looking at upcoming earnings opportunities, and getting ourselves set up for the upcoming week. There's a lot to learn from what we did each and every week from, historically looking perspective, but there is a lot of value as well in talking about how we're actually going to make money for this upcoming week. So let's get into it. Quickly from top to bottom, Uwmc did not have a good week. We're still stuck there with a break-even price of, I think 640, 635 overall on that trade. So we're going to let that one run its course. And once the extrinsic value on that is gone, probably going to look to close it out. Rocket Lab has been one that's been awesome for us. It's been pulling money every single week, it seems like, and helping us on weeks where some of our other trades don't go so well. So we're super thankful for that one. Really happy with how that one's played out. But that's another one we made $500. And again, these are 7.5 strike puts for January 2022. So with that said, I think the stock's up to 14 as of the end of last week. So I think the plan for now is going to be just to keep holding these and suck out all the premium that we can. If they get down to 20 cents, I think, in the next week or so, that'll be our cue to head for the exits. But I think there's still a decent bit of premium we can capture here. BRPM is one that I'm actually really excited about, even though it was a loss of a couple $100 last week. But we made a whole YouTube video about that. It's up on our channel, full length, I think 17 minutes explaining the thesis behind that. So we're not going to talk too much about it. Long story short on that one, really limited downside, potentially huge upside. If you want more info on it, check out that video that we put up this week. SPIR is one that, gets more and more attractive for entry every single day. It seems like we could actually flip over to the chart here really quickly so I could show you guys what I'm talking about. And this is a former SPAC. This is the typical chart pattern that you'll see. Big run up, huge drop off when they had the pipe unlocked, but bounced off of 540, rallied up pretty high back to about $6 or $7 a share. If we go back to the 10-day chart, you'll be able to see that rally a little better. But started to form a base in this 550 area. Even if we just look at the last month of trading activity, yeah, there's been a decent drop, but a lot of that is in relation to the pipe lockup expiry on the shares. And we are positioned where we get max profit anywhere above $5 a share, which if we go back to the chart, we have to zoom out. It's going to be down here, indicated by that red line, just over the next 3 weeks. And that's another important point that we're going to put forward as we go through the stream here, because a lot of stocks only have options that expire once a month as opposed to having weekly options. SPIR is one that falls in that category, as you can see, November, December, February, as opposed to having ones every single week. And typically, we don't like to enter into those 4 to 5 weeks out. For the last couple of weeks, we've avoided those for the most part, with the exception of this because, as you can see from an ROR perspective, 8.7% is a very, very nice number. Gives us a really nice downside cushion in the event that this thing keeps dropping. So that's why we were happy to enter into that one. But the point we were making right there is the fact that we're now 3 weeks away, as you can see indicated by the 19 days until expiry for those monthly option chains, which expire on November 19th. So that's something we're going to start to turn our attention towards, because a lot of these stocks that only have monthly options offer some really nice returns and more stable, safer returns compared to some of the weekly options trades we have. So this week is a week that we're going to try to look to mix a few more of those into our positions. But yeah, point being, this is a good one. We doubled down on it this week to get our average credit up to 33 cents a piece, and one that, if these expire worthless, we're taking home another $1,300 off those. So we're looking forward to seeing those play out over the next few weeks. TMC is one where, we've gone with the traditional HT wheel approach. We could actually look at the trade breakout right here. Might help to control zoom in here a little bit. But we entered into it when TMC was at 3.7 just a couple weeks ago. And from there, our initial break-even price, we sold the 3.5 strike puts. We got our break-even price down to 3.3 from doing that. And then eventually, it went down below 3.5. So we took assignment of shares at a 350 basis. And the basis right here is 325 because we took assignment of more shares this week to get our basis down there. But, the point was we take assignment, we sell covered calls, which we have right here in row 7, which is numbered row 3 on the actual table itself, for 17 cents a premium. That got our break-even price down to about 313, and then beyond that, we sold puts to create the covered strangle that we talk about with the HT wheel approach. And so our break-even price gets reduced by 17 cents plus that 10 cents to get us down to a 303 break-even price. And that was for last Friday's expiry. So what happened? It kept going down, right? We've seen an 18.92% decrease on the stock in just the 14 days or so that we've been holding on to it. But all is not lost, because as you can see here, with what we're planning on doing for Monday, is selling 3 strike covered calls on these, which we're going for about 20 cents as of market close last Friday. And again, if we sell 20 of those on the 2,000 shares that we've accumulated up to this point, that is going to be a direct cent for cent, 20-cent reduction of our cost basis and get us down to a 281 break-even price now. So we now have put ourselves in a position where if it goes back up to 3, we are presuming we're going to sell the 3 strike tomorrow morning. We'll get those shares called away if it gets back above 3, and we'll be in a position where the stock has dropped almost 19% on us. But with all of the premium that we've collected along the way and the process we've followed to lower our break-even price week after week, and it really has only been 3 weeks so far, so not even that long of a process, we are still in a position, despite this huge drop, to take home a 6.167% return on capital in just 2.5 weeks, which is still a very, very nice annualized return. We like to target those annualized returns that are 100% or above, because if you, volume-wise, stack up more and more and more of those, you're going to have some really nice returns on an annual basis, obviously. So that's where we're at with that one. We're going to sell these hopefully for 20 cents first thing Monday morning. Current position is we're holding 2,000 shares that are uncovered. If we wake up Monday morning and this thing is somehow opening above $3 a share, we'll happily get rid of those and take the gain and not even need to worry about selling the calls. But we will we'll see where that stands. But that's the current plan. That's where it's going to put us. And why, even though this stock, admittedly is not the greatest company in the world, one of the things I feel like we often say is that, hey, it doesn't have to be a great company. We just have to have great numbers. And by great numbers, I mean the amount of premium we're getting on these, so we could put ourselves in a position where even if we enter into something when it's at 370, we can handle a 24% drop in the stock over a 2.5, 3-week period and still make money. And that, at the very core is what we attempt to do with our strategy. And that is some huge downside cushion on stocks like these. So, despite it maybe driving us a little bit crazy by going down week after week after week. We are still in a position where we can win, and I do have the capacity to double down once again. I don't really want to per se, and I would wait until this gets below this to do that again, but we have that if we need it. So I'm not worried about this position at all, despite the continued downturn. And then moving down the list, DraftKings was a good one. CRISPR, we got in and out quickly. We took money. We took the profit that we had before they had earnings just to take that risk off the table. It would have worked, though. Beyond, same deal. We took this profit in pretty much one day, about 50% of max profit in one day on what would have been, a 5-day, about 1 week trade. So we were happy with that trade-off, even though, again, that one would have worked as well. The Wish 5-strike puts, we love playing Wish every time it gets down to this 5-strike level. We could throw the chart up here really quickly to demonstrate why we like to do that so much, because it seems like every time it gets down here, we've seen some nice bounces back in mid-October. This is October 19th right here, and this is last week, October 27th, 28th, where it bounced off that 5 level. Obviously, they're in a kind of continued downtrend, because another one where it's not the greatest company in the world. If we click down here, I didn't mean to click that far left, but they have earnings on November the 10th. That's not this upcoming Friday, but the Friday after. So at the very least, I'm happy to play them for one more week. And I guess a little spoiler alert, that's what we did. We sold Wish 5-strike puts for the upcoming week. 22 cents a premium on those. And that is going to stick us with a 478 basis. And if we, let me close this out. If we take a look at the chart, that 478 basis falls right around here, and I'm perfectly happy having my break-even price at this level for another 5 trading days. So that's what happened last week, and why we pushed that trade forward to the upcoming week. IRNT was one that dropped really, or I guess spiked, so it was an IV reversion type opportunity. We take a look at that chart. Big spike up here. Let us sell 10 strike calls if we throw it at a 10 strike. And Sierra, to that point you're making in the Twitch chat about them having a class action lawsuit, that is very common about, I guess, among stocks that drop like that because investors feel that they've been misled, yada, yada, yada. I wouldn't use pending class action litigation as some sort of detractor from the company itself, because I think one thing I was looking at was HYZN. This is another one that's had a really similar drop-off, but if we go to the live news, you'll see that they have investor alert. We have general class action lawsuits filed on behalf of, multiple shares. And one thing that these stocks that are listed right here all have in common is the fact that they've experienced similar drop-offs. Investors feel that they've been kind of scammed or duped and that they weren't given, entirely factual information up front. And that's just the result of that, not necessarily the fact that, they're pending a lawsuit and the result of that lawsuit is going to crush the company. That's not the reality of the situation that TMC is currently in, despite the fact that it is very, very low compared to where it used to be. But nothing wrong with getting in at that lower price, bottom fishing as we are. But I guess back to the discussion, IRNT, as I quickly try to wrap up the weekly recap and not have it run too far over again. So we've got a bounce off of the 10 level. It spiked up to 17.38, which, if we know our IV reversion strategy, we like to use these spikes in implied volatility to sell puts that are decently far out of the money and capitalize on the increase in premium that the spike in implied volatility brings. And if we go to our studies, as there are, I don't know if you guys can hear it, but there are so many horns, and I think I hear a car alarm and a siren going in the background right now. A lot going on outside. I'm not going to take a look. But with the implied volatility spike, as we see modeled right here with the implied volatility study under the chart with this blue line, we see this big spike in implied volatility. If we go to the 10 strike puts, which is what we sold, we can take a look. Let me make sure we sold, 11.5 10 strike puts. So what we sold, and we admittedly got out a little bit early, so what am I doing right now? More info, TOS charts. Let's throw the option price up. So this is the day, as you can see by this big plunge in the purple line, the theoretical option price, because theoretically, when the price of a stock goes up, the price of an option should go down. And anytime that this theoretical option price outpaces the actual option price, that's when we like to jump in, because the price action you'll see is really consistent with what IRNT displayed over the back end of last week, and that is a steady drop off until the purple line and the candles representing the actual price meet up with each other again. So what happened was we sold these 10 strike puts. We sold for 35 cents a piece, so right around here. And then if we actually pull up the IRNT chart and T, we would see that there was a pretty steep drop off the day after, as it really was coming back down below 12. And I said, you know what? I don't want to hold on to these for 6 more days or 7, 8 more days, however many days it was until that 11/5 expiry. But that was the decision we made, and we were in a situation where, you know, we had a decent cushion when we got in, because this thing was 14, 15, 16, 17 bucks a share. Went back below 12. We said, hey, you know, a lot of that cushion has evaporated. Looking at our position right now, we could take $50 of profit and just not even need to worry about it again. So that's what we did. You know, was it right? Was it wrong? I think from a conservative perspective, if our main focus is conserving our capital and protecting our investments, I think that was the right move. Even though in hindsight, like 2 days later, as we could see right here, it got down to 10 or 15 cents. And we would have made a couple $100 more off that, but that's all right. You know, you're not going to hit max profit on every single trade. You know, if you're in enough trades that you have go from green to red, you know, that'll do enough to scare you from getting in a situation like what we had right here, and, you know, being able to pull out of that trade. So that's why we made the decision we did. I wouldn't say it's right or wrong. I think what we did was, you know, putting our strategy and, you know, market mindset, as we mentioned, with conserving capital. If you were trying to bite off a little bit more, you know, I think that's a perfectly valid decision as well, because at the end of the day, right, we set up these 10 strike puts to give us some pretty big cushion, and even when it was at 12, that's still another 20% decrease in the stock that you're protected against, and you would have made that couple $100 extra bucks. So, you know, no right, no wrong. There's always going to be one decision that would have made more than the other, but no sense in second guessing ourselves and kicking ourselves for not making that one decision that would have got us the absolute most profit. GNUS is one that was a little bit disappointing, because we had 1.5 strike puts, and this thing ran up to, I think, 257. There it is, the peak after hours. So we thought for sure our little max profit point of 150 was going to work out nicely. It did not, in fact, because I guess what was going on with Genius is that on this day right here, October 27th, they said, okay, we've got some really good news that we're going to announce. They didn't say what it was going to be, but that's what caused this big increase back here on the 25th. And with that increase, there we go. We see this rise in implied volatility, which, when implied volatility comes up, at some point it must come back down. When that comes back down, the option premiums come back down, and we see that decrease in implied volatility over the 1 week period that we have plotted here on the chart. So that's what we played right there. We were able to get ourselves in with the 150 max profit point, but we got 14 cents or 16 cents rather premium. So our break-even price was this red line of 134, which it came in above. Now, yes, it's a little disappointing that we couldn't have gotten 300 more bucks, but, you know, anytime we make 180 bucks of profit on a trade, I'm not going to complain about making money. That one worked out well. One question to answer about that is, why didn't we just wheel it and go into the next week? The answer is, at one point, these were worth about 12 or 13 cents a piece. So I would have been happy with that, because our break-even price would have been 134 minus 12 cents, which would have gotten us down to like 122 in this neighborhood right here, while still giving us that upside to 150. But as, you know, Friday or Thursday and Friday progressed, it just kept coming down and down and down and bleeding out, to the point where I said, hey, similarly to our decision with IRNT, we've got profit, no need to push it. Let's get out, get our buying power back, and wait for something that looks a little bit better. Xcla and VISL are really similar setups, and I'll just show you the Xcla chart, and this can cover the discussion on both of those really quickly. But there you have it, the same big uptick. We have this spike in implied volatility that's hopefully going to come back down, and we were able to sell 2 strike puts, so our max profit point is above here, even though that's, you know, it's unfortunately come back down below that level. But, you know, not to fear, because our break-even price, I think, is 150. I think it's 162. We sold them for 38. So it's right in that profitable range for us right now. We've got 3 more weeks on it. We'll sit back, see what happens. Not too worried about that. Happy to take it to expiry. And that's pretty much it. Apple and Starbucks were cool little trades right there, because with Apple, a PL, you know, you have a big, large cap stock that has not the best earnings, opens down. And when these things open down like this, you see this rise in implied volatility drop off. I guess the better way to phrase this would be, look, implied volatility was large before earnings. It crashes at market open, but typically it'll go even further down by the end of the day. So with this big drop off, we were able to sell, what strike did we sell? We sold 142 strike puts just for Friday. as long as Apple stayed above, not, excuse me, not for Friday. We did these a week out for 11.5. So if by next Friday, excuse me, Apple stayed above this level, which, pretty good looking opportunity right here, since in the past 10 trading days it hadn't gotten anywhere near that. Those were going to make money. But the great part is, with this bleed out and implied volatility, what you'll see happen to options that are decently out of the money, like what we sold. If we go back to the 142 strike put, I could show you the actual price action on that. If we right click it, more info, TOS charts, let's plot it up there and take a look at what happened. So here is Friday morning. This is the big drop off in the stock, and it was surging a little bit because there's some unpredictability, right? When there's this big red candle in Apple post earnings, where is it going to settle? But typically what you'll see is that these options are really, really overpriced, and especially when you're able to play something like Apple, where, if you take assignment, that's okay, because you're going to be an owner of a very, very solid stock. So we were happy to do that. And just by the end of the day, these things went from 55, 60 cents down to 15 cents a piece. So you would have realized 75% of max profit, even though these were a week out in just one day. So setups like that post earnings are always something that's good to keep an eye on when you have a really solid stock that has a big drop off post earnings. Now, what we did personally was we got out for 50% max profit, because that was our original plan. Another one where we, did we leave some money on the table? Technically, yes, but we're not too worried about that, because we're really happy with the amount of money that we were able to bring in with that. And we are never going to get mad at making profit. But Starbucks, same exact idea. We sold the 102 strike puts. SPX got a little bit interesting because our initial spreads that we sold lost some money, and we spent the rest of the week fighting it. And by the end of the week, it pretty much finished right on the number 4605 that we needed it to stay below. So we were able to recoup the money from those spreads and come out on top on SPX, which is, I think this really demonstrates the value behind using credit spreads to play the market back down. Because one, if you're wrong, and we were very wrong. The S&P 500 went up 1.35%, and that's a huge 1 week increase. And despite that, our bearish plays that we had were able to make money. So that's the benefit that you get with the cushion that these call credit spreads give you. A question in the YouTube chat we've got: is your implied volatility graph specific to calls or puts or both? And the answer is both, because it's the implied volatility of the stock itself. So while option chains do have their own, if we type in Apple, for example, option chains do have their own implied volatility, which you could view right there on a weekly basis. The stock itself also has its own measure of implied volatility, but that measure of implied volatility will apply, maybe not directly one-to-one, but in general, surges in implied volatility of the stock are going to result in surges in implied volatility on the options. So that is what that's what we keep an eye out for. And that is the idea behind that, and using this blue line to plot that historical implied volatility. So I guess we made a little bit better time than normal. We did it in about 25 minutes, but that was our recap for what we did last week. Again, $961 profit, but the S&P 500 had an insane week, going up 1.35%. But at the end of the day, we're not too upset because, one, we made money. I'm never going to complain about making money. Our goal is to outperform, so we definitely could have done better. And looking back, there were some things that we could have done better. TMC wasn't the greatest. Uwmc went up a bunch. BRPM lost us a few $100, and then Visalink was not the greatest as well. And then our first SPX spread kind of fell on its face. But despite all of those, plays that didn't go terribly for us, and I think I said this a lot in our Discord servers, the fact that it seems to me like we made money on what was not a very good week at all. And that's always something we could be happy with this strategy. And it's something that seems like it happens a lot, to be honest. And, closing the loop on the last week in our performance, that was the last week in October. We took home a profit of 5.41%. And thanks to the little surge that the S&P 500 had at the end of the week, we did underperform slightly in October. But that's kind of, quote unquote, the risk that we run with our strategy, the risk that when the market is really, really ripping, we'll underperform. And we didn't really underperform by that much. Even being in line during a great month like this is perfectly acceptable for the type of option selling strategy that we're running. Because then you'll have months like September, you can see here, where the S&P 500 dropped off 1.5% on the month overall, and we were still able to make a nice return. There's only been 2 out of the 10 months so far this year that we've underperformed. But more importantly, We have not lost money a single month on the year so far, and we are going to keep that going hopefully into November. And we're on a really nice streak ever since we kind of adjusted our approach in July. I think the best way to visualize this is looking at our performance against the S&P 500. We got really tired at about the end of June of all these huge swings on a week-to-week basis. So we said, hey, we're going to use a little bit less buying power, target some different areas in the market, and hopefully smooth things out. And it's been going really, really well for us so far. So I'm thinking that is going to be our strategy on a go-forward basis. And, you see a lot of red mixed in here, some big red numbers on the first half of the year. But since we got out of this little red patch in July, we have had, let me count these right here. We've had 15 weeks. We've made money in all but 2 of them. And the combined loss on these 2 weeks is about, $4,100, which is, you could find a few weeks in here where we made that just in 1 week alone. So things have been going very, very well since we made this slight adjustment to the strategy. And we are going to keep that up moving forward as we hope to get a 5th consecutive profitable week, which would be a huge, huge win for us. But now the big question is, how are we going to do it? And before we get into this, super, super quick self-promo here. Hourglass-Trader. Oops, if the keyboard works for me right here. Hourglass-Trader.com. We've got HT Premium, which if you're curious about the trades, I know we talk about them every Sunday night, but if you want alerts to every single trade as we make them in our Discord server, you're going to get access to the premium channels if this thing loads as well as I speak about this. But here we go. We've got HT Premium. People ask us, where do we post our trades? This is the answer right here. Every single entry, every single exit is posted in this channel for you to see and be alerted as it happens. We have trade plans we come up with. We have a watch list that we update sometimes. We have option scanners that you can use so that you could scan for options the same exact way that we do and get the same results we do. And a premium chat, which is, far more active than, unfortunately, the main chat room has died down a little bit. But, a lot of that activity that was formerly in the main chat room is in here. And the way to get access to that is joining HT Premium through the homepage of our website right here. We've got 2 options, annual, monthly. If you do the monthly, you can get a free trial. So 1 week, no financial commitment. And then you can figure out if it's right for you. I'll be the first person to tell you we're not trying to force anyone into this. Everyone's financial situation is different. But I think those who have signed up can attest this is a great value for less than, it comes out to less than $1 a day for the value that you're going to be getting out of this. And that is where I will end the shameless self-promotion. You can get a free month if you use our Webull sign-up link and deposit $100. But that is that's the HT Premium spiel. So you can sign up at our website, hourglass-trader.com, if you want to get in and join us in there. But now to the main event for the stream, where we are going to talk about what we're looking at for the upcoming week. And before we do that, we got a quick question from ODX014 in the Twitch chat saying Bkkt doesn't seem to be slowing down. Can we share our thoughts on Bkkt? So let's throw the Bkkt chart in here. And, quick answer here is that jumps like this are not really sustainable, right? I think there's a lot of buying activity. There's not a ton of shares that are trading on this one currently. I don't like the fact that just disappeared. But, a jump from 8 a share up to 60 at one point after hours, down to 20 before it rebounded up near 40. Not the greatest thing to invest in. But with that, we will get questions about it a lot because with big spikes like this, we see these big return numbers on the put side, right? If you saw an at the money 35 strike put, or what's now, or I guess what was at the money with a 40 strike put as of market close last Friday for the next expiry November 19th, you're going to be seeing 38.65% return on risk, which is an enormous number. However, the risk is enormous itself, right? If you sold the 35 strike put, or we could use the 40 put, for example, for $11 a premium, that's going to give you a 29 break-even price, which on the chart is right here. And, if we zoom this thing out a little bit, this red line, historically speaking, is not a price I would really want to own this thing at. What's happening right here is not fundamentally driven. It's not because the company has done something insane over the past month or so. I mean, there's been some decent developments in the crypto area, which is what this is. This is a crypto miner, but, nothing to necessitate, or I guess support this kind of a move, almost up 10x at the peak. So that's something we definitely want to avoid. If it starts falling back down, gets to this 15 range, and you can get an entry where your break even is around 10, that's probably where I would recommend getting in if you were looking for a more bullish trade. But, trades like these, even if you're able to survive for a week or two at a time and collect that premium, they typically do not end well. So I always recommend against chasing things like these because just not a great value, not a great risk to reward ratio on what's going on with that one. So I would say avoid that. If you want to enter into a bearish trade, I think buying a put debit spread would be a decent idea for that. Because if you have a call credit spread and this thing runs way up, it's you risk potential early assignment. And we got Sierra saying they have a deal with MasterCard, which definitely recognize they've had some positive business developments, but I think if we're being honest with the performance of the stock and what's been happening, if we go to the 10-day chart here, a partnership with MasterCard isn't something that would necessitate I guess we can use the closing price Friday. It wouldn't really necessitate a 6x increase in the stock. So definitely stay away from that one. I'm not by any means saying this is a bad company, but these types of setups, these types of runs on companies that were former SPACs just do not typically end well. And so better to be safe than sorry. If this thing runs up to 100 and you miss out, you missed out. But, you weren't going to get that great of a return by selling options if it runs up to 100 anyways. And I think the risk that's on the table with that far outweighs the potential reward. So that is my opinion with that one. But with that said, let's get into what we've got for the upcoming weeks. I think there's some interesting things we could take a look at. SPIR, we've doubled our position on that last week. I think this is one that definitely is a great entry currently. If we go back to that chart, for those of you who are maybe tuned in a little bit late, you're able to sell 5 strike puts here for 30 cents a premium, 40 cents a premium as of market close on Friday, which is an 8.7% return on risk in just 3 weeks. If you enter into those now, that 40 cents a premium is going to get you a 460 break-even price, which if we zoom out on the map here, the chart, 460 break-even price is all the way down here. There we go. So if you extend that out to the left, this is where your break-even price would be on SPIR. And I think that's a very safe place to be for the upcoming 20 days or however many days away we are. I think there you go, 19 days away from expiry on that one. So if you're not in that one, I think that's a great entry. We are already in it, so we increased our position. But this is as high of a position as we're going to get to. 10% of our account is kind of where we like to top out at off the bat for a lot of these trades. So we're definitely happy to double down at some point in the future, but we don't want to do it up front because if this thing drops to 4, we're definitely going to wish we had that additional amount of capital to scale further into the trade if it continues to drop from here. But, even looking forward, if we're assigned at 5 and, have that 465 basis on it, looking forward to December, there's still some very, very decent call premium. So we could, presumably take that basis below 4 headed into December if we do have to take assignment in 3 weeks. And if we don't have to take assignment in 3 weeks, there you go. You're getting that really nice return. So that is why I like the way the SPIR sets up for the coming weeks. TMC, we talked about that one earlier. We're just going to continue riding the wheel as we lower our break-even price week after week after week, where we think we'll be able to get it to 281 come Monday morning if we're able to sell those 3 strike calls for 20 cents a piece. But if your question may be, hey, if we're not in this one, is it a good entry? And I think the answer to that would be, if you can get 10 cents on these 2.5 strike puts, I think that's a decent option because, that's a solid return for 1 week, and that would get you in with about a 240 break-even price, which is, better than what we've got. Market maker move right here is only 27 cents, so presumed downside is, still going to be above 250, so those numbers stack up really nicely. And even though this isn't the greatest company in the world, and you can feel free to roast me for continuing to play this type of a company, I think the numbers just work out way too well to pass it up. So that's why we're in it on a week-to-week basis currently. Xcla, VISL, we're happy to keep rolling with these. As far as entry, I think Xcla is one that I would still enter into. I would not go into Visalink at this point. I think maybe a 1.5 strike. I don't know. Do they have that for November? They do. I think a 1.5 strike for 10 cents would be a little bit better value than what we've got at the 2 strike right now, because you could still get a really nice ROR number if you get a fill at 10 cents, as opposed to taking on that additional risk of selling something that's currently in the money with that 2 strike put. So that's how those look. ASTS, 10 strike put. I think I may have been a little bit delayed in updating the price on this one. Yeah, these are down to 35 cents a piece. 3.63 return on risk. With 19 days till expiry. I don't know if this is the greatest entry at this point for ASTS. I'm pretty bullish on this one long term. So even if we get to November and these haven't been assigned, I may take a look at December as well, because you get some decent premiums there as well in December. But as far as entry, that one maybe isn't the greatest. Wish 5-strike put, we talked about that one a little bit earlier. We love the chart every time it gets down to 5. They don't have earnings this week, but they have them next week. Looks like you can still get that 22 cents of premium in there. I think that's a really solid entry point. Right 8 at 13 strike put, RAD. We sold this for about 16 cents. Looks like it's dropped off a little bit. I think we sold them for 15 cents is what we sold them for. Looks like you can still get somewhere in the neighborhood of that. But that 13 strike is going to give you a break-even price of about $12.85, where we can plot that right about here. And that's where the bottom of this wick is pre-market on 1028. So, there's some basis for having a little bit of support in that range. And if we zoom out, look at the 10-day chart, zoom out, look at the 20-day chart is what I want. I guess that's what we already had up. We go to the studies. We can go to all studies, our SI, our favorite little indicator of whether something's overbought or oversold. And it looks like it has bounced a little bit. It was a little more oversold, I think, when we entered into the position. And that was one of the justifications there. But I still like the way the premium stacks up. Implied volatility, I think, may be a little bit elevated. Let's throw that study back up there to confirm that. Oops, as I completely whiff on it. Implied volatility, slightly elevated here from where it had been for the past month or so. So we're hoping that falls back down at these levels at some point and starts to kill that premium. But either way, I don't think a $12.85 break-even price in the context of looking at what it's done in the last 6 months is too bad. So I'm pretty happy with that entry. And that still gives you a little over a 1.5% return on risk there. And there's some decent margins. So the return on capital is going to be a little bit better. So we've quickly tied up the loose ends right there. That is what we have for the upcoming week. But, this is a relatively short list when you take into account what our trades look like come end of week. Every single week, we usually have it fill up the entire page and then some. So we're definitely going to be looking to be making some more moves. And what are those moves going to be? One, we love to target those implied volatility reversion trades that we like so often. LIDR, we didn't talk too much about that one. But those 4-strike puts last week were a huge opportunity for us. We pulled $840 off those, and I think just about 24 hours. It was a really solid setup. We could pull it up here really quickly so you can get an idea of what we're looking at. But there you have it, this big green wick right here. If we zoom in on that a little bit, big spike in the stock, big spike in implied volatility. It was previously trading around $4 a share, so you presumably had some sort of base in that 4 level. Let us sell some 4-strike puts for a really nice number. If we look at the another good one where I think the chart's going to do a good job illustrating of what this looks like, right? If we throw this on a 5-day, maybe 10 days, better way to look at it. So you have, there's definitely going to be a drop in the premium on the stock, but off the bat, when this thing first spiked on 1026, which is what we see right here in the morning, you're able to see this thing was still selling for 40 cents during this surge in the stock. And it isn't until the implied volatility started dropping off right here between 10 a.m. and then 11:30 a.m., so noon, over this 2-hour period when the stock dropped back down, implied volatility leveled off. Funny enough, even though the stock price went back down, the price of the puts went back down, which is interesting, right? Because theoretically, when the price of the stock goes down, the price of the put should go up. But when implied volatility gets a little bit funky like this, some weird things happen with the pricing of the option. And having this big decrease in the price of the option is exactly what we look for, right? So we were able to sell those 4-strike puts for 35 cents a piece, maybe. What did we get in for? I don't remember. Yeah, 35 cents a piece. And we were able to get out for 14 cents a piece down here, taking that profit relatively quickly. And again, that's just from this one big spike. And we were able to pull a really nice return from a return on risk, return on capital, whatever you want to call it, percentage, despite the fact, and even though this is a little bit risky, right? If you were playing shares, this is incredibly risky, something I would never think about touching. But the fact that the whole time we were able to play this thing with 4-strike puts, so even if things went terribly and it really kept dropping, we were still going to hit max profit anywhere above this level, which really never came into jeopardy during this spike and subsequent pullback. So that's why we love to target those types of trades. So that's item number 1 that we're going to have on our watch list for the upcoming week when those opportunities come up. And the best way we've found to identify those So if you go to Stock Hacker, we have our load personal. We have IV reversion stock scanner right here. It's just basically going to tell you anything that's moving more than 50% in a day, because these big spikes are, this was a 100% spike at the peak when implied volatility was peaking, and that's when the opportunity was peaking. So when stocks show up on this IV reversion scanner that we have, I'm not going to say that we've built, because there's two criteria on here, so it's not like this was some huge lift as far as building this. But and sometimes if nothing comes up, I like to play with this number right here, get it down to 40 cents, because the first thing you have to do to have a 50% move in a day is have a 40% move in a day. So maybe messing with the number right here to potentially get some more results up on the scanner is a good way to get an eye on some of these potential IV reversion opportunities. So that's what we're looking at first and foremost. Second, we're going to go to our bread and butter, right? The option scanner right here, high return on risk puts without earnings. Some decent options coming up here. And what I have, interestingly enough, is I have November 19th expiries highlighted right here. And I thought it'd be a good exercise if we live on the stream went through some of these and tried to identify some that we could sell, 2 or 3 weeks until expiry, decently out of the money, see what we can get, and then have those ready for Monday morning. So we can start with DCRC. Let's take a look at whatever that is as we evaluate some of these opportunities. DCRC, right? Yeah, there you go. Decarbonization plus acquisition company. So very, very common theme with some of these scans, especially when we're isolating the monthly option expiries, is the fact that you're going to see a lot of SPACs in these results on the option scanner. So that is why we've had to deal so much with SPACs lately. And I think we've learned a good amount about some of these SPACs, and I'm really excited with what we've learned and being able to put what we've learned into play, and hopefully be able to benefit from that in the form of making money. So what we see with this, assuming they have some sort of merger coming up, and it doesn't look like they do, right? Because theoretically, if the merger were coming up, these 10 strike puts would have a little bit more premium on them. So if we take a look at the live news, looks like Solid Power Partners to jointly produce blah 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 blah. Where is Solid State Battery Company lands SPAC deal? Here we go. So we're going to pull these up. We're going to take a scroll right here. 165 million pipe, but it's a 1.2 billion valuation. So it's about 10%, just over 10% pipe ownership. So unlock shouldn't be too huge of an issue right there. Trying to find out when this merger is going to be. And I may have completely missed it as they announced the merger in June. When is the deal going to close? I don't know if it says it in there. But we'll see. I assume a lot of the 12.5 strike premium is just from the fact that this thing's run up so much in the past 5 days. And, we would probably assume that this would, or, expect that this would pull back. So I don't know if I love the 12.5 strike. I think 10 strike puts are relatively safe. You could get, 33% margin requirements. So $100 return on $4,000 of capital, isn't enormous, but it's 4% for a 3-week period where you should have decent protection of that 10 strikes. I don't believe that the merger is anytime between now and November 19th. So that's maybe not the worst one in the world with this spike right there. Rtpy is another one that's interesting to look at. I think I took a quick look at that before we started the stream, but didn't get too far into it. There we go. Rtpy. What did I type? RPTY. Rtpy. There we go. So this one's sitting dead at 10. It's another SPAC. But with this one, if you look at the 10 strike puts, you're going to see that there's, $1.15, $1.30 of premium on those. So that's the type of premium that we expect to see when there's an upcoming merger. And I couldn't quite figure out if we go to live news again. Let's see. So this is Aurora. They are going to be an autonomous driving company. And I think scrolling further down here, I saw they're backed by Amazon and Uber. Maybe that was Amazon and Uber backed driverless vehicle startup Aurora aims public listing in $11 billion SPAC merger. So that's interesting. Let's see if they talk about the pipe ownership in here. They do not. And one quick way, instead of digging into the filings, Rtpy, if we actually go to Twitter, There are some Twitter accounts out there that are very helpful for this type of information. So if we type in is it Rtp? I already forgot. This is embarrassing. Here we go. Rtpy. Rtpy, and then we type in pipe right after it. You're going to get a handy dandy summary right there. So 10.6 enterprise value, 1 billion pipe. That is a just 10% ownership, really similar to what we just looked at. So I don't think pipe unlock is going to be as big of an issue. And for those of you who are new following along here, pipe unlock is going to be an issue when you have 30, 40%, as we saw with something like SPIR, or I think LIDR was another one that has similar unlock percentage, because you'll see these huge sell-offs when companies or early pipe investors get the chance. But with that 10%, I don't think that's too big of an issue. I'd be perfectly happy to sell even these 7.5 strike puts at 25 cents a pop. Really nice looking margin requirement on those. So if we type in the calc right here, get my handy dandy system calculator out. It's a 3.45% return on risk, which if you think about this on a forward basis, right, we have, the calendar comes up here for me, 1, 2, 3 weeks till expiry. That's still kind of hitting that goal of over 1% per week that we like to look for. And if I pull this back up, it's even better if you divide that 250 max profit by that 2480 of buying power requirement that we get with the margin privileges on that one. That's now a 10% roughly return on capital over the next few weeks. So I think that's one that I definitely want to add to the watch list. See if I can get a fill at 25 cents a piece on that one in anticipation of their upcoming merger. It seems like a really interesting company with autonomous driving. They've got some decent sponsors with Amazon and Uber, and that pipe lockup is only 10%. So I really don't foresee this thing tanking too far after the merger. And even if it does, we would have that 725 basis that we could take assignment on. We could wheel it. We could sell calls for December at 7.5 or 10 and get that thing even lower down below 7 as we go week after week and month after month with this one. But again, Mnmd has it at a 1.85 implied move, which would put that at 780. Excuse me. Let me think. 9. It'd be 815 worst case scenario. Sorry, getting a little late. The mental math is not the quickest right now, but that would be 815 worst case scenario according to this market maker move right here. So the 7.5 strike puts should be pretty safe. So I'm going to put Rtpy on our little list right here. I'm gonna start a little watch list for us. Rtpy, and that'll be 7.5 strike puts. Next up on the scan is going to be, let's take a look at HYZN, because that's one I actually looked at decently before we kick the stream off. It's interesting because another former SPAC where you see this price action. If I zoom out further, stays so long at $10 a share, then they have the merger, drops off, and what happened right here is the merger dropped off, and then you see another big drop off right around here at the end of September. And this happened because if you look at the news and go to the end of September, this is one area where news is really helpful. If you go back and look at the last, I guess I can't do between 20 and 180. I might have to switch my presets on that one. But you see this big red candle, you say, okay, what happened here at the end of September? You could scroll, you could line the news up, and you will see that it dropped 24% because it was a target of a short seller report. And I believe in this short seller report, they essentially alleged that some of the largest customers were fraudulent customers. They weren't real customers or revenue. The short report alleged that they were another Lordstown Motors. And if we take a look at Lordstown, ticker on that's going to be RID. We're familiar with that one. Bottomed out at 464 right here. They did not have a great run. But again, sometimes even the worst companies can still have a little bit of life, especially some of these former SPACs right here. So this 4 to 5 range could be near-ish the bottom. If we look at what's going on at the 5 strike, we could get 55 cents of premium, which is why this is such an attractive potential investment. But with that in mind, I like the way the numbers stack up. I'm never going to be mad at a 12.36% return on risk. But again, what's the issue with this one? The issue is largely the fact that this would give us a 445 break-even price, assuming we were able to get 55 cents of premium on it. But the market maker move up here, which we use to help justify the trade that we were potentially going to make on RTPY, RPTY, whatever those middle two letters are that I keep flip-flopping, We use that to justify this. This might be a little bit of a detractor for this potential investment because that would imply that the bottom end of the range here would be $3.80, and we really wouldn't be too protected from a 380 downside if our break-even price off the bat is going to be 445. So with that, with the short report, I think the single biggest thing is that, hey, when you're selling options, you want to sell options on stocks at strikes that you would be comfortable owning. And I just don't know if I'd be too comfortable knowing what we've known about this from this really short, from the really short due diligence here. I don't know if I'd be happy owning this at 445 because it could be something like TMC where it gets down to $3 a share, and then we're really kind of reeling and playing from behind with that break-even price. So maybe we'll wait another week and check if that premium is still there. But I think 3 weeks out with that premium just isn't enough of a cushion for me because a lot can happen over the course of 15 trading days. But when we get to a week, 2 weeks out, might be a good one to revisit and see how that looks. So back to the scanner, NXTD, this one's on here. It had a reverse split, which is really not bullish at all, so I'm going to stay away from that one. I believe, is it WeWork? Let's see what We is. There you go, WeWork. So I think fundamentally this is one that I do not believe to be the greatest company of all time. I thought this was a former SPAC. Let's see. There we go. Wait, I don't know why this is being talked about right there. Let's go further back here. It looks like it was, yeah, there we go, via SPAC deal after the failed IPO. So it looks like they went public via SPAC with Bkkt Acquisition Corp. But point being, after the merger, that 10 price floor is really no longer a thing. Now, what's interesting about this is the fact that we've got, okay, this is very, very interesting because we have weekly options on this one, and they're at 50-cent intervals. So a lot of the issue we have, if we go back to HYZN, for example, is, not a lot of flexibility, which is what we kind of alluded to when we said, hey, I don't like getting in on this 3 weeks out because if something happens in the next week or two, I want to be able to do something. And you, quite frankly, can't do that too effectively when you're selling something 3 weeks out. But with WeWork, you may be able to do something a little bit more effectively with 50-cent intervals, weekly option expiries. This thing just started trading, so implied volatility is still relatively elevated. Topped out at, $14, falling back to this 5 level, already bounced off of 10 once. I don't think I'd be comfortable getting in at 10, but I think, maybe $9.50 if we can get 35 cents of premium on that, or the 9 if we can get 15 cents of premium. That's not too bad of a deal either, because if we look at that, that's 1.69% return on capital risked. So that is, I think, a very, very solid value. And again, one where I don't think it needs to be the strongest company in the world, just as long as that premium on a week-to-week basis looks good. And here, I think it looks great. So I'd be happy getting in with some November 5, 9.5, or 9 strike puts off the bat, depending on where those open up Monday morning. So let's put WeWork, WE, on our little makeshift watch list here. So back to the scan. And again, this is how we use the scan, right? We go stock by stock by stock. DCRC, didn't like the way that's set up. Rtpy, interesting setup. We liked it. NXTD, reverse split, not the greatest idea. WeWork. Good flexibility on those. We liked the weekly options. We liked the option strikes. We liked the premium. We'll throw it on the watch list. But again, next result, HYZN, not the greatest setup. They have a pending short report. That's something we didn't think would be the greatest idea in the world to get into. So we stayed away from it. And now we can keep moving down the list bit by bit by bit. AEHR, never heard of this before in my life, but we are going to find out about it tonight. This is how it works. AEHR, Air Test Systems. First, I guess, reaction right here is the fact that this thing 20 trading days ago, so about a month ago, was trading at $11.88 a share. It's already at 22, which means it has doubled. So unless we can get any sort of premium down near that original base, which we really can't, quite honestly. So I'm not in love with this potential trade right here. I think this is not a great one to go into. We can go a little bit further back, see what else is going on with this one. But, oh, yeah, absolutely not. This thing was, back in July, this thing was less than $3 a share. Would hate to get in on this with, even the 12.5 have tiny, tiny premium. But even a 12.5 basis right around this level doesn't look good, historically speaking. So that's one where you're going to stay away from. Go back to the scanner. Look at the next one, Mnmd. I think that's Mind Medicine. I think they're a mushroom company, like not psychedelic, but medicinal mushrooms. So Mnmd. There you go, Mind Medicine. And this is one that's kind of been an interesting one, but what scares the hell out of me here is the fact that the market maker move is $1.20, which would put this down to what? It would put it down to 130, which, if you sold a 2.5 strike put for 25 cents, that gets you a 225 basis. You're not anywhere near where you need to be from a downside protection perspective. But what I'm very interested in is, the volume is quite frankly interesting. So I'd imagine they have some sort of pending news or trial results that are coming up. Because if you have 5,000 contracts worth of volume at 4 or 5 cents a premium out of 5 strike, people might be expecting something big here. They launched a program. Let's see. They're going to chair a summit. I'm not really seeing anything here that would suggest they have something. Okay, MindMed joins Clinical Trials Transformation Initiative. I don't know if this is going to have information about them potentially reporting something. And as much as I hate stock twits, this is one area where it's actually kind of useful because people will just be talking about whatever on there, and typically you'll find any upcoming events being discussed. Mnmd, MindMed. Because I got to be honest, if there's no pending trial results or anything of that sort coming up, I mean, this looks really, really solid, right? We're able to get an 11.61% return on risk. Did we get any buying power? Not too much. We don't get any margin help right there. But we'd have a 225 break-even price. If we zoom into the last month, where was the bottom? 216. So I guess this is really where the risk comes from. There was this spike. I don't know what caused it on October 28th, last Thursday. But let's see if we can see anything on here, interestingly. Really interesting pictures people are sharing with random quotes. Not a lot of activity on these boards talking about what's going on here. Yeah. This is very typical. People telling you that something's going to be worth millions. So and their username is Mind Medicine. So very, very unbiased source. But psychedelics will have to wait for regulations to lose. But nothing doesn't look like we've got someone saying they should have loaded more at 220. Well, I've got a great way for you to get stock at 220 if you really believe that. Not the worst setup in the world. It doesn't look like anything too crazy is happening here. This just really gives me pause. I don't understand why this number is so high, and until I look a little further into it, we could quickly check Twitter right here to see if anyone's tweeting anything about Mnmd. We could pick up a little bit more info. Let's see right here. It doesn't look, nothing too people saying it's gonna fly who probably don't know too much about what's going on. There we go. Upcoming event. Now we're starting to get to it here. We have upcoming event for MindMed. I have literally no idea what this upcoming event is, but we are starting to figure out that there is something going on. So to avoid, there we go, phase 2B data readout in November 2021. We'll flow over to the next data read, help bring these medicines to market after phase 3. So this is pretty big, right? And this falls into the sector of almost biotech type binary results, where if it goes really well, the stock's probably going to fly up. But if it doesn't go very well, risks tanking, which is now where I see we are getting that 120 market maker move from. But those types of big results do not really go well with the whole option selling strategy. So that's one we're going to stay away from. If you're interested in the stock itself, nothing wrong with just straight up buying shares and hoping for a good result. There's definitely some potential downside there if trials don't go too well. But I think if they do go well, there's definitely some serious potential upside. But even more if we zoom further out here, I know where this is going to be some very, very big potential downside. So one we are going to avoid with the option selling strategy, but kind of an interesting one, interesting little maybe futuristic area. So let's go back to the scan. I don't know why everything got completely... Oh, it didn't get thrown off here. Mnmd, DNA, that one has another short report out on it, so we're not going to look at it. Futu, I believe, I think it's a Chinese stock. That's one of Jules' favorites. I don't think she's on the stream tonight, but I'm sure she would be here to let us know all about it. Yeah, this is just, it's starting to look a little bit interesting because I think the last time we looked at this, we plotted this line right here saying, hey, if it breaks below this level, there's a lot of downside here, which is evidenced by the fact that when this thing runs from 39 up to 200 and gets back down to this level where it's bounced off of a couple times, that becomes a very major support level. That's what we plotted. And I guess it looks like we were dead on when we said if it broke below that level, we were going to see some serious downside. And that's exactly what happened. However, with it bottoming out at 46.5, bouncing back up, implied volatility is a little bit elevated again compared to where it's been in the last 180 days. If we take a look at RSI really quickly, we can get another idea of if it's overbought, oversold. And definitely in oversold territory right here. In the last few times it's gotten into oversold territory. Granted, it could definitely go much lower from here from an RSI perspective, but we could potentially expect some sort of bounce. Let's take a look. They've got weekly options. It looks like there's some decent, beyond decent premiums here, to be honest. The market maker moves only 287, which would put you at a low end of the expected range at about 50, 50.5 or 51, which is right between here where you're able to get 3.59 or 4.11% weekly premiums. Let's see if you can, you can go way out of the money here, right? You can go to 45 strike put, which if we go to the 1-year chart, let's get an idea of where this thing was running back up from. It looks like we have a little bit, if we plot 41 right here, extend that out to the left. I like the way this lines up with the price action from November to the end of December of last year. I think there's definitely some decent support in that 40 level where, again, it's 1.27% return on risk, which is very, very nice. Let's see if we get any margin help right there. We do. We get a lot of margin help, right? So normally it would be $40,000 to sell 10 of those. And again, that's just the standard amount that we have in there. So you don't need to sell 40,000 of them. But that 40,000 number is what this 1.27% ROR is based off of. But that 450 max gain right here that we have divided by the 13,500 roughly of buying power effect gives you what is a 3.3% return on capital in 1 week on something that looks to be about 20% plus out of the money. I don't know if they have any upcoming events. One good way to check this is if we take a ticker we don't need anymore, like ENDP, type in FUTU. Looks like they have earnings. Do they have earnings? Where is it? It's flashing up in the bottom left of my screen. I don't know if you can see that, but that's really strange. Looks like it says 11/18. So you're still 2 weeks before earnings. But the one big thing here, obviously, is this. If we go to the last and we type in FUTU under fundamentals, we are going to see that this is, come on. It's Hong Kong. It's obviously Hong Kong is not straight Chinese, but it is an Asian company, which we like to stay away from that kind of regulatory risk typically. And, there's definitely a lot of it here. However, sometimes, again, it's one of those things where the numbers look pretty decent. And to really protect yourself against a bad downside move, if you want to, you can kind of cut that return in half, go with the 36-40 spread, get yourself a decent return, and there's a lot at risk. Absolutely, there's a lot of risk. So I don't know if a spread would be the greatest idea right there, but that 40 number looks pretty good. Although that price action between May of 2020 and backwards, where the stock was hanging out at 10, maybe something that gives you a little bit of pause, because it is starting to look a little bit like our buddy, I spelled it wrong, but Hyliion, which is where you have this big spike upwards, you have a spike back down, it starts to recover, you're like, okay, things are looking good, and all of a sudden, before you know it, it's trading back where it was before. So I think I definitely see some similarities between these charts and where this one could potentially go. So, if you're trying to get a quick buck, that 40 strike put may be the way to do it. However, a decent bit of risk there. I just don't know if that's risk that I'm willing to be taking on for the upcoming week. But if Futu is a stock that you're comfortable with, I think this is definitely a good opportunity from an option selling perspective. I think just one of the investing theses that I like to fall back on is just avoiding those Asian stocks in general, just because they're subject to a high amount of regulatory risk, which creates some potentially unpredictable
potentially unpredictable. There we go. I'm already getting tongue-tied. Guess we're about an hour in. It's fair that I'm getting tongue-tied at this point, but it creates some potentially unpredictable volatility that we like to avoid when we're selling options, right? Just like we talked about with Mnmd, we don't want to be entering into these stocks where there could be this huge move one way or another that could, move more quickly than the option selling cushions that we give ourselves can handle. So that's the idea. We're going to stay away from that one, but we can keep moving down the list here, see what's going on. ADMP, very interesting. One strike put. Let's see what's going on. A very, very cheap entry. 105. Okay, we have the 3 chart here. It bottomed out at 27 cents beginning of 2020. I'll cut it some slack. We can go to the 180. But it looks like, 70 cents could be potential downside here. Spiked up to 160. We start with the wide view. We start moving in and in and in. Adamas Pharmaceutical Company. It's a pharma company. Biotech's a little iffy for me. I mean, 10% ROR is, undoubtedly really, really solid, but is this something you would want a 90-cent basis on when we've seen over the last 180 days you could potentially have downside to this 70-cent level? I mean, maybe, not the worst thing in the world. I think this is a good one to maybe familiarize yourself a little bit better with potential upcoming events in the market. It says shares rise after FDA. So they just got FDA approvals, it looks like. FDA approval. And that was back when on October 18th. So let's see when that candle came through. And this is it. This is that big candle. So this really would have been a fantastic example of an IV reversion type trade. We had a base forming right around this $1 level. There was good news that had the stock spike up. So theoretically, if you're trading around here, you have good news. Your stock should be worth more. That big spike in implied volatility should have let you sell these one strike puts for a decent amount. And I'm kind of interested to see what these historically had been going for. If we go back to 20-day, wait, where's October 27th on here? Or October 18th, rather. This is where it was. It was selling for, it looks like you could have gotten, it's been about 10 cents the entire time. But I guess this also does illustrate why the implied volatility reversion strategy that we like to run is so effective, right? This thing was at about 160 come October 18th in the morning, and it has since dropped all the way back to 110, which is about a what's that drop? 40%, and the puts have not moved in value at all. And I think if you can get a fill here, one that may not be the worst to take a flyer on. Let's see if we get any help in the margin. We do. Oh, this is still food too. Okay, I was gonna say this. Those numbers seemed a little big. But no, you have to sell these fully cash secured. But 10% ROR is a really nice number for a 3-week period. You would just be having your eyes glued to this stock that's really dancing on the line right here at this $1 level. But it doesn't look like there are any upcoming events. They already had good news. Demonstrated that it's been able to hold this dollar level for about a month. And you only needed it to hold for about 3 more weeks. So maybe not the worst in the world, but I wouldn't invest any significant amount of capital into that. Because like we saw over the last 180 days, things can definitely get a little bit worse. And it looks like this 90-cent range may be, I would consider this to be the biggest potential downside over the next 3 weeks, provided something doesn't come out of the woodwork and just totally ruin their company. And that this would get you there with that 90-cent break-even price. So if you can get a fill at 10, I don't hate that trade right there. So let's go back to the scan. Let's do one more really quick before we sign off for the night, so we can get some ideas. We've got Rocket Lab showing up. Big fan of Rocket Lab, but we've already got our January position in that, so I don't think we need to join in on that any further. Let's look at some ones that are a little bit higher out of the money, meaning we can get some premium selling decently far out of the money. And I don't know why all these are showing up as NA, which is kind of annoying, but let's scroll down to where the numbers start showing up. And here we go. We've got IRNT, which is, there you go, 67% out of the money, but you're still able to pull a 1% return. And I think what we should target right here, since we're looking 3 weeks out, I think I want a 3% return or better. So let's run this scan again. Because again, 3 weeks till expiry, getting a 3% return or better means you're getting a 1% return or better on a week-to-week basis. And that's roughly what we try to target. So again, we've got this sorted by percent out of the money. And now we've got some, okay, this seems incorrect. This is not 292% out of the money. But we can get to some of these that are decently out of the money, right? Let's see right here. We've got Rich H saying, can you show us how to get historical data again? And I'm assuming that question is about on option premium. So what you do right here is you right click on the option, you go to more info, and again, you're going to want to make sure you right click on the specific option you want. So the one strike put for ADMP is what we were taking a look at. You're going to want to right click it. You're going to go to more info. You're going to go to TOS charts. And this is really just a breakdown of a potential grid for what you could be looking at on the chart screen. We only like to show one chart at a time. So we click the box in the top left, and then you're going to be able to see the price action historically of that put that you're looking at. So that is how that works. Back to the scan though. Futu, we talked about that one. Bkkt, we talked about that a little bit ago, but definitely a little bit too high for where we want to sell, and that's going to be the case with a lot of these where there's premium very far out of the money. BBIG, it looks like the scan didn't even get updated here. I got to be honest with you. It's showing still stocks that have a 1% return on risk. Let's try this again. Looks like it's still not working great. So we're going to take it from the top on ROR, and I'll try to figure out why that's doing that. JAGX, I think that's a biotech or, healthcare type company. So we're going to avoid that one. Any, I know we've got some any fans in the chat. I'm not positive when their perceived merger is, but I got to be honest, I don't think the merger is going to go well. But if we know when the merger is and are able to play puts in the meantime, I think that would be one that I'd be happy to get in on with the way crypto has been acting lately. And I think maybe through the efforts of our Discord server, we were able to get some weekly options on those. So ignoring the November 19th expiry, I would go front month expiry November 5th on those if that were a decision I were looking to make. UAVS, oh my goodness, this one used to be so much higher, I think. 2.5 strike put. Let's take a look at UAVS. And it did used to be a lot higher. I think I remember almost scalping this one at some point at the 9 or 10 level. But it's crazy to see where this thing has fallen off to in the last over the last year or so, right? This thing ran up, and again, this I think does such a great job illustrating of why I say stay away from these stocks that start out at these, as penny stocks basically, and run up to $10+. Obviously, it's fun. If you got in at this level, you're going to be sitting on a great return. People are going to be excited about those returns. So you're going to see that stock discussed over and over and over again on social media. But with that, you have to understand that if you're getting in at this level or higher, you're kind of getting in a little bit too late. People are going to be talking about their gains. People are going to be throwing garbage out there saying, oh, it went from 20 cents to 17 bucks. What's stopping it from going to 100? Theoretically, there's nothing stopping it from going to 100, but from a risk to reward perspective, and how many of these setups we've seen play out this exact way, just not a setup we want to look at. But now that it's approaching back at the original base before the big run at about this 250 level, it might be interesting to take a look at what's going on for the upcoming month. And it looks like we can, similar to Mnmd, we're able to get that 25 to 30 cents of premium to get us down to a 220, 230 break-even price. Let's see how that looks over the last month. Yeah, 225 break-even price would look very, very good. I still have to zoom out more to even get down to it. So I think that is a decent break-even price. If we extend that out to the left, maybe look at this on the 180 day. That's obviously going to be below. But if we look at it, oh, Jonathan showing up in the, did I accidentally change? I 100% accidentally changed percent out of the money instead of ROR. That is a great catch. Thank you for keeping me honest. Getting late, I need some help sometimes. But let's get a return on risk and get this back up to 3. But to close the loop really quickly on UAVS, another thing that scared me, remember with Mnmd, we saw that this, decent premium objectively for a 3-week period. We like the fact that we can get down to like a 220 basis. But this market maker move up here, right? This is kind of one of the biggest pieces of justification that I like to use for picking strikes and, anticipating a range of movement on a stock. And this is telling me there's a plus minus 1.34 move over the next 3 weeks, which is enormous and leads me to believe that something else may be going on with this. So looks like they have a patent. They acquired a drone maker. Shares jumped up a bunch because it looks like their unit qualified for U.S. defense agencies. And let's see. I don't see anything too bad or too crazy for the upcoming week, but it may be another good one where if we type in UAVS, we are going to see if they have some sort of upcoming event. And it doesn't look Snickers advertisement if anyone's hungry. VisionLink already has drone contracts. Let's see what we got here. People just talking about how it's trading near the lows. I don't see anything here that really justifies that market maker move of 1.2 or whatever we saw. Government contracts news. People saying there could be a nice squeeze. People saying it may have found a bottom. Another thing to keep in mind is the fact that this may just be a long list of people in denial after looking at how this stock has performed in the last 180 days. But I don't see a reason that the 2.5 strike puts would be too terrible. And additionally, you really only need half the buying power. So you're able to get about a 20% return on capital on this thing, assuming it stays above 250. So since we can't really identify anything that looks too risky as far as potential upcoming events, this could be an interesting little play. Now, definitely one where I would not put a significant amount of my portfolio into, but if I were to sell about 20 of these and try to scoop up about $500, that would only put about $4,500 at risk. And again, these dollar numbers are all relative, right? You know, $4,500 of risk for me may be different for you. It's less than, I think, 5% of my portfolio, so that's something that I would be comfortable with doing. But if you were to enter into a trade, just be sure you size similarly. Less than 5%. Definitely don't go above 10% on this one, because I think there is definitely some risk there. But that reward that we're seeing right here is very, very nice as well. So I think this is one I'm going to add as the third name to our little VS, little makeshift watch list we have for the upcoming week. And since Jonathan was so attentive and eagle-eyed to see that I completely messed up here when I was editing the scan, and I edited percent out of the money instead of return on risk. And typically I find when I don't think something on my computer is working that, you know, I'm the idiot and not my computer. But let's run this back, see what we get. And we are going to filter by percent out of the money. Do that again, scroll down to where we see the numbers start. You know, a lot of the same names, right? Bkkt, DWAC. Lucid is one that I just vehemently disagree with the valuation on. Now, GWH is kind of an interesting one here. Now, it looks like the value of these did drop off a little bit. However, you know, one, I think this has weekly options, so I don't know if there's any need to be messing around with the November 19th expiries. And it looks like you could get some decent returns on just the weeklies, right? You can get a 1.82% return here. But again, going back to the idea of where we want to own these stocks, you know, you get that 1.5–2% return right around the 15 level. I just would not want to own the stock around this level. Again, if it drops back down, I'm happy to keep this thing on the watch list and keep posted. So I think this is one of these Bill Gates battery tech backed companies. You know, a lot of bullish things get thrown around for things like this, but I think this is not a level I would want to chase at, because we've already seen several stocks today that have premium because they're on the back end of this bull run that we see right here, with UAVS being an example. So I think I would stay away from that one. What else do we see here? You know, Futu we already took a look at. FFIE, kind of interesting here because a lot of premium on these November 19s, but again, another one where they have weekly options which offer decent returns on a week-to-week basis. However, what we would see is that this is a former SPAC. Again, really, really similar setup. I don't think it's the greatest company in the world. It's Faraday, which is an EV company. I guess when it went public via SPAC, we were able to see further back. I guess it went public around $17 a share, but it's come back down and it bottomed out at 7.4. So theoretically, there's decent value in there on the 7.5 strike puts because you can get 1.69%. But this is another area where it would be very interesting to take a look at the potential pipe unlock, which is something we like to talk about a lot here. So if we talk about FFIE, this is a feature that a lot of, I say feature, it's not good for the stock, but it's a feature a lot of former SPACs have here. And you can see on October 4th, they filed the S1A, the amended registration statement for the shares. And if we have this thing load, hopefully in a timely manner while I'm talking, there we go. We're going to scroll down here. We are going to see that they have, come on, scroll back up here. They have 236 million shares, and I believe they have a pipe offering. If I control F, control F, PIPE, we are going to see there are 76 million shares, 76 million pipe shares. So this stock, which has, if we go back to the top and look at the equity structure, they have 236 million shares available. And when the pipe shares are unlocked, 76.1 million of those are liable to be sold, which if we break out our handy dandy calculator again, 76 million divided by, I think, 230 million shares, we said, is a 33% share unlock, pipe unlock, which is an enormous number. A lot of the SPACs we looked at earlier tonight were about 9 or 10. Never Ender, welcome to the stream. Hope trick-or-treating went well. We didn't have too many people come over to the house this year, so didn't have a lot of responsibility on my side there. But who knows? I could be accidentally ignoring them all right now. Who is to say? But again, the pipe unlock on this is 33% of the outstanding shares, which is a very, very big number. The SPACs we looked at earlier tonight were like 9, 10, 11, 12%. What SPACs had pipe unlocks that were this big? The answer is something like SPIR or LIDR, where the price action on that is very, very bearish. And this big red candle here is when these pipe shares were unlocked. You see a lot of selling from early investors. LIDR was an example. SPIR was an example where they were all the way up here. And, if we cut the chart off right here and take a look back, what does this look a lot like? This looks a lot like GWH, which is why we like to avoid those types of setups. But again, going back to the 180-day chart, you had the pipe unlock, and this thing just nosedived all the way down to 720. And those are two stocks we looked at that had between 30 and 40% pipe share unlocks. And this is where they're currently settled with the SPIR at 567, bottoming out at 540, and then LIDR with 517 bottoming out at 404 a share. So there's some serious potential downside here on FFIE. Another interesting little tidbit is the fact that one of the pipe investors for FFIE is Evergrande, which is that big Chinese realtor that's been defaulting because they can't afford to meet any of their debt obligations. So on the pipe unlock, they would almost certainly be forced to sell off all of their shares in FFIE, and potentially we could see this thing settle back in a similar range as LIDR and SPIR. So how do we play that? The answer is one, I don't want a bullish trade on this. Selling a 7.5 strike put is a bullish trade. That's something I'm going to try to avoid. What could be interesting though is, maybe, dare I say, buying a put, or maybe selling a call credit spread would probably be a little bit safer because we're betting on this thing to go down, and you could definitely see that people are expecting it to go down because this 6 strike put has what, 15 cents of premium. Decent amount of premium for how far out of the money that is. But what we do know is that, going back to the filings list, they filed this October 4th. Typically within 2 to 3 weeks, you'll see that 424B3, that Form 424B3 filed, which unlocks those pipe shares. And that's something we're expecting, quite frankly, any day now, since this was originally filed on October 4th. So I don't think it'd be, the worst thing in the world to potentially try to time this up and maybe buy some of these 8-strike puts. Call me crazy here, but at the same time, what we always hate about option buying is the fact that, one, it has to go in the right direction. 2, it has to go in the proper magnitude in that direction. And for this trade, it would have to go down below, 780 in a week for you to make money, which is almost a 10% drop in the stock. And then 3, your timing has to be right. So that drop would have to happen between now and Friday. So I don't hate the idea of maybe going out to 919, selling an 8-strike put, and then trying to capitalize off that. But the premium here is just very, very, very steep. And I just don't know if there's a ton of opportunity on the option buying side. We got Joseph and Mohan. Welcome to the chat. Sleepy Condor. We've got another person back from trick-or-treating. I tried to make the YouTube thumbnail Halloween themed. I know a lot of you guys watch on Twitch, but I did put in 15 seconds of effort to put some candy corn ghosts and jack-o'-lanterns on the YouTube stream. So hopefully that pulled some people in. But to get back to something that's more relevant, we're going to talk about Clove, because Joseph Anthony in the YouTube chat had a question about it. Saying 6.5 strike, 20-ish days out. Train at 750. We love to play this one around 7, which is why we've already got a red line here. And I think that red line is about 7 on the dot. Let's see. 5 strike. We like to sell the 7. There's not a ton of premium. There is 0.94%, which, from a return on risk perspective, that's right around the 1 that we like to target. And if I recall correctly, you get a decent amount of help here. 50% requirement from a buying power perspective as compared to what it would take to sell these things fully cash secure. But if we go a couple weeks out, as suggested, 6.5 strike puts are offering 3.26%. That doesn't look too bad. I think they have earnings upcoming. There we go. Earnings are going to be on the 8th of November, which I still don't know why this is showing up so low on my screen, but we could barely see it. It's on there enough for us to know. But what we do know is that there should be inflated premium for November 12th, which is what we're seeing right here, right? This increase in implied volatility from 89 up to 107 between non-earnings and earnings. So it really comes down to if you are trying to make an earnings trade on this one. And for us, I think the best move is typically to go, play the non-earnings week first. And then if it goes up before earnings, congratulations, you've made a 0.94% return in a week, which is really, really solid. And if it goes down, congratulations, have a much better basis headed into earnings when you're going to be able to sell calls that have inflated premiums. So there you go. Sleepy Condor says they had shots for the adults at trick-or-treating this year. And he also said lots of Reese's in my tummy. So it sounds like those shots were doing their job. Happy for you, Sleepy Condor. Glad you're able to join us tonight on the back end of this stream. But with the Clove, I don't hate the idea of selling the 7.5 strike puts. Ideally, it gets a little bit closer, so maybe wait. If Monday or Tuesday of next week are decently red, that'd be a solid opportunity to swoop up some of those 7 strike puts and then wait before earnings. But that is why if you go 20 days out, they have decent premium. And what you'll see here with the implied volatility is actually it's higher slightly on November 12th expiry as opposed to November 19th. So you're going to want to sell these, which will give you a 4 point, or I guess if we want to use that example of 6.5, they're going to give you a 2.12% return as opposed to a 3.26% return another week out. So that is the way that I would approach that one. We'll do this final question of the night from Jonathan in the YouTube chats, and see so diligently pointed out that I was totally messing up my filter on the scan. But saying, what do we think about Affirm, ticker AFRM? And honestly, quick answer, not a fan at these levels. This gets back to our discussion of risk to reward. And, the risk here looks like it far outweighs the reward. We've looked at so many charts that have had this kind of setup and have not gone well. I think it's a decent company. I mean, there's nothing wrong with, if you want to hold this as a very, very long-term investment, sell some puts, take assignment, and then hold them until you don't need them anymore. But if you're looking at this from more of a trading perspective, looking for, I'm going to use the term favorable basis here because Sleepy Condor in the chat just pointed out how much he hates that and is the bane of his life. But for a much better basis, I would hang tight. It's slightly overbought. And looking at this between, August 27th when it was trading at 60, it's almost tripled in what is that? That's 2 months. It's almost tripled. And for a large cap company like this, that's a lot of value to add in a very short window of time. So I think if you're looking for an entry, I would throw it on my watch list and give myself an alert when it gets down to maybe 130. But there is this gap down to 108 where there's probably ultimate support. I think somewhere in this, oops, I did not mean to do that. I don't know how that just happened. But somewhere in this range is going to be much better for entry than up here. And I would put that on the watch list, wait on it, because I would much rather, not place a trade here. It runs up to 200 and I'm like, oh shoot, I missed out on all that money. Then get in on a trade at 162, have it drop down to 130 and be like, oh shoot, I now have lost money. So that is where we stand on Shibu. No, oh my gosh, I was reading the chat. Sleepy messed me up. That is not where we stand on Shiba Inu. That is where we stand on Affirm. Where we stand on Shiba Inu, just because I guess it was mentioned with incorrect spelling from our resident drunk in the chat who has had some Halloween shots. I would not touch it. I do not like to touch a lot of crypto, and especially those coins that have made these enormous moves up. And it's insane people are making real money on this. Good for them, but I think at this point, when you get to the point where a coin has jumped so many multiples of its original value, that risk to reward, there we go. We could bring this full circle. That risk to reward just is not incredible. But looks like we are hitting an hour and a half on the stream, so we came in a little bit above the hour. Perfectly happy to keep it rolling as we did. I think we've got a decent watch list for Monday morning. First order of business is going to be that we're going to be selling TMC calls to cover our shares. That break-even price is going to be in a really, really solid position if we can get about 20 cents on those, as I'm hoping. And then beyond that, Rtpy, WE, UAVS, I think are three interesting ones to set up with November 19th expiries, so we can add those with some of our other November 19th expiry trades. And just let those cruise over the next 3 weeks to the finish line. Now that we're 3 weeks out, I think that's a better window of time to get into those monthly expiries as opposed to the last couple of weeks when we were 4 to 5 weeks out. And then above all else, keeping our eyes on the scanner to see if there's any interesting things upcoming. I'm probably going to throw together some earnings analysis because if we go to this server really quickly, I think I posted the screenshot of earnings for the upcoming week, and that's really the only area we weren't able to hit on tonight is the upcoming earnings. So if we go to the earnings plays, I put this in here. Yeah, tons of big companies reporting earnings. So I think this is going to be another really good place to have your money. DraftKings is Friday morning. Big fan of DraftKings as a company, so that might be one that I get in on. But again, with all these earnings trades, I like to wait right before the announcement, right? So if something's being announced Wednesday after close or Thursday morning, I'm going to wait until Wednesday afternoon to enter. If something's being announced Thursday afternoon or Friday morning, I'm going to wait till Thursday afternoon to enter because I guess getting in Monday morning would leave a little bit too much price risk in this 2 to 3 day window before these earnings. So that's the way that I typically like to play those. But we are going to hopefully come through on our blog with a really nice list of earnings. And I can show you historically what I'm going to be publishing for these earnings. Hourglass-trader.com. There we go. A little more self-promo as we go back to the website here. That's not what I meant to click. I'm doing a terrible job live navigating through my own website. Earnings primer. So this is what we are going to be throwing together for the upcoming week with earnings because there's a lot going on. What we're going to give you is historical earnings data. We're going to show the 180-day chart. We're going to show you the expected implied move via this yellow MMM number that typically is up here but is not up there right now, so not convenient. But we'll give the expected range. We'll plot that expected range on the chart, give you some thoughts about what we like, what we don't like for just all of the big names that are coming up. And again, these expected moves turn out pretty well and are very, very useful for an option selling perspective. For example, AT&T was $25.59. That expected move was 70 cents, giving us a range of $24.90 to $26.28. And let's see how that turned out. There you go. It turned out beautifully, right? So if we go back to the blog, this expected range that we plotted before earnings definitely held true. It bounced off the bottom end of the expected range. So the idea is that if you sell options on either side of these, above the top end or below the bottom end, you're going to make money on those. And that is the idea we put forth on these earnings. So we're going to come through hopefully with a blog post full of those for these earnings in the upcoming week. But that'll be something to keep an eye on. You could sign up for those by creating an account. I guess you could sign up for alerts on that by creating an account on our website, hourglass-trader.com. But that is all we have for this week. We took a week off last week. We got back to it this week. I like to think, us skipping last week, this was our punishment. We underperformed. So hopefully we'll get back to it with a fresh week, a fresh month, as I need to update this to say the week of, I guess we'll call it 10/31 because Sunday is the first day of the week. But thank you for joining us. We're going to put everything we talked about into play this week. But again, at the beginning of the week, there's only so much we could talk about. Things change so quickly. So come join our Discord server if you want alerts. We give away one free trade a week, and those free trades have been doing pretty well so far, or I guess pretty well as of late, right? The one we had last week made $180. A week before that was $150. A week before that, $225, and I think we had two that week with that. Another one had $100 of profit, but they've been coming together really nicely. But if you want more than that, if you want every single trade we make as we make it, that's going to be in our premium Discord server. All the packages are going to be on our website. You can join HD Premium. We have monthly, we have annual, we have free trials. So if you decide it's something that you want to do, but entries, exits, they're all posted and alerted here
as we make them. And Reese's are the #1 Halloween candy. If you feel differently, you are incorrect. Shout out to JM in the chat saying PB and chocolate, best candy combo ever. But yeah, that's how you're going to do it. Sign up for HD Premium on our website. That'll give you access to these, all of our trades plans, watch lists, scanners, and the premium chat, which is typically far, far, far more active than the main chat room. We have a lot of good discussion here on a week-to-week basis. But that is all we have this week. Hopefully we can do a little better this week. You know, I'm never going to complain about making money as we continued our really nice stretch of weeks, our really nice stretch of months more so, and hopefully can keep it going for November. So we are once again going to sign it off with our very cheesy ending, but I think it's good luck doing it this way. So I'm going to keep that up. Thanks for tuning in. This has been the Hourglass Trader, where as time passes, we make money. We will hopefully see you guys